When you picture retirement for someone in the top 1%, what do you see? Maybe they're traveling around the world flying first class. Maybe they're adding to their classic car collection or spending months out of every year on luxury cruises. But when you picture how they got there, what do you see then? Maybe you imagine a group of people who stumbled into wealth by chance or luck or through some kind of secret knowledge that the rest of the world is not allowed to see. Well, I'm here to tell you that that's simply not true. In fact, the reality is much less dramatic and a lot more practical, and it's what I'm going to show you today. Hi, I'm Josh Palmer, Director of Financial Planning for the Noble Group. I'm a certified financial planner with over 25 years of experience working with families, professionals, and business owners who have built long-term wealth. Now, throughout all of that experience, I have noticed that the top 1% share a set of consistent habits, patterns, and financial structures that almost never show up in the general population. The difference is not usually intelligence or education, and it is rarely luck. It's almost always behavior, discipline, and alignment between their money and their long-term goals. So today, I want to walk you through exactly what the top 1% actually does with their money and why those decisions put them in a completely different financial category than the average person. And as I go through this, I want you to listen not for the secrets, but for the structure, because the structure is what creates the outcomes. And the outcome for you can be your dream retirement built in the same way the top 1% builds theirs. You'll also have the ability to get a free video review from us with personalized recommendations catered to your unique situation. So stay tuned until the end of the video to learn more. First, the top 1% treat money like a long-term tool, not a short-term convenience. When most people receive income, their primary question is, what can I do with this right now? Whether it's spending, upgrading, traveling, or reacting emotionally to a financial moment, the focus is short and immediate. But the top 1% flip that question completely. Their instinctive response is, what can this money build for me over the next decade, or even, what kind of retirement can this money ultimately build me? That simple shift from immediate consumption to long-term construction is one of the most powerful dividing lines in wealth building. They think in years, not weeks. They measure decisions not by how something feels, but by what it becomes. And because their time horizon is long, their behavior becomes calm. They do not chase fads and they don't panic during downturns. Their sense of stability is not tied to headlines or market noise. It comes from understanding the long arc of compounding and the discipline to let that arc do its work. The second defining behavior is that they automate and organize their money in ways that seek to protect them from themselves. I want to be clear about this. The top 1% are not relying on motivation or willpower to stay disciplined. They engineer systems around themselves so that good decisions happen automatically. They automate savings so money leaves their checking account before they ever see it. They automate investments so that they are contributing consistently regardless of market conditions. They automate cash flow so essential buckets like emergency savings, retirement contributions, tax management, and long-term investing happen behind the scenes. When you remove impulsiveness and emotion from money, you remove most of what derails long-term success. People imagine wealthy individuals constantly making brilliant decisions. The truth is that they make a small number of highly intentional decisions and then build automated systems that repeat those decisions every single month without needing their emotional involvement. Wealth is not built by daily excitement. It is built by quiet, predictable behavior carried out consistently over the course of years. The next habit the top 1% share is that they allocate their money with purpose, not with randomness. When income increases for most people, spending increases at almost the exact same rate. When income increases for high net worth individuals, their first thought is not what can I buy, it's which bucket does this serve. They tend to operate with clear, intentional categories for their money. They build a cash reserve that preserves their lifestyle from uncertainty. They allocate to retirement accounts not because they are afraid of the future, but because they understand the simple math of tax-deferred compounding. They allocate to investments that create long-term appreciation instead of short-term entertainment. And they often allocate to income-producing assets such as real estate and dividend-paying stocks that create new cash flow streams independent of their active work. When your money has a structure and a direction, it compounds with stability and intention. When your money floats around without a plan, it tends to drift towards consumption and away from growth. The next thing the top 1% do with their money is extremely counterintuitive. They seek to protect their downside before they reach for the upside. Most people chase returns first, looking for higher yields, higher risk, and higher excitement, and they leave preservation for later. But the top 1% reverse that order. They ensure their foundation is solid before they pursue higher gains. That means proper insurance, proper estate planning, proper liquidity, and proper tax strategy. Seeking protection does not feel exciting. It does not feel like you're growing, but it is one of the hallmarks of long-term wealth. Because the wealthy understand something that is not talked about enough. You do not have to earn extraordinary returns to become wealthy. You just have to avoid catastrophic mistakes. Losses destroy compounding far faster than gains accelerate it. So when wealthy individuals put a lot of energy into seeking to protect their assets, they are not being overly cautious. They are defending the engine of compounding that creates wealth in the first place. The way the top 1% invests is distinct too, because it looks surprisingly boring from the outside. People imagine wealthy investors spending all day picking stocks, timing markets, or hunting for the next brilliant opportunity. In reality, most long-term wealth is built on broad, diversified portfolios that aim to grow steadily over time. They know that markets reward patience, discipline, and diversification more reliably than prediction or speculation. They avoid concentrated bets unless they have deep expertise. They understand that time in the market is exponentially more important than timing the market. And because their portfolios are designed around their long-term objectives rather than short-term trends, they tend to outperform emotional investors who are constantly reacting, chasing, and shifting strategies. The richest people I have ever worked with were not chasing excitement. They were planting financial seeds across various asset classes and letting time do the heavy lifting. Now, this characteristic I see very frequently across the wealthy and especially the top 1%. They treat taxes as a strategy, not a burden. For many people, taxes show up as an annual frustration, something they think about once a year and then forget. But wealthy individuals think about taxes every time they make a financial decision. They leverage tax-advantaged accounts, long-term capital gains rates, charitable strategies, and timing of income to reduce taxes over a lifetime, not just a single year. They also understand the difference between tax avoidance, which is legal and strategic, and tax evasion, which is illegal. In their world, tax strategy is not about gaming the system. It's about understanding the rules and using those rules the same way big institutions and professionals do. When you keep more of what you earn, compounding accelerates dramatically, and long-term goals become easier to work toward. Taxes are one of the most powerful financial levers available, and the top 1% treat them that way. Now, when it comes to spending, the top 1% also spend differently than most people expect. Yes, they enjoy comfort, travel, and experiences, but their spending ratio is almost always lower than people imagine. They rarely live at the outer edge of their income. They build margin into their lifestyle. They do spend, but they spend intentionally and usually on things that align with their values, such as family experiences, education, philanthropy, or things that improve their quality of life in meaningful ways. And here's the subtle truth. The reason the wealthy can spend freely without fear is because their spending is grounded in a strong foundation of savings, investing, and long-term planning. Their lifestyle rests on a system, not an emotional impulse. And in a strange way, that structure gives them freedom. When you know your financial life is stable, you can enjoy the present without worrying about the future. Now, another important behavior is that they evaluate opportunities through the lens of return on time, not just return on money. As wealth grows, time becomes the more valuable asset. Wealthy individuals are constantly asking whether an opportunity adds responsibility, stress, or time commitment that does not align with their goals. This perspective allows them to avoid opportunities that look profitable on paper but are expensive in terms of time and lifestyle. They're not looking to maximize every dollar. They're looking to optimize their lives. And that requires a certain maturity in financial thinking, one that prioritizes balance, autonomy, and long-term design over short-term accumulation. Relationships are also paramount to the top 1%. They maintain strong relationships with advisors, accountants, attorneys, and professionals. They understand that wealth becomes more complex as it grows, and that complexity requires support. Wealthy individuals delegate not because they are incapable, but because they value clarity and expertise. They do not try to be their own tax attorney, investment strategist, estate planner, and insurance specialist. They build a team. That team becomes a protective circle around their financial life, allowing them to focus on what they do best while striving for precision management of their wealth. But maybe the most important thing the top 1% do with their money is that they align it with their long-term purpose. They know why they are building wealth. They know what matters to them. They know the role money plays in their life. Money is not the goal. Money is the tool that supports the goal. Whether that goal is freedom, impact, family legacy, generosity, or simply a peaceful retirement, their financial decisions flow from that purpose. When money and purpose are aligned, decision-making becomes easier. You stop chasing what others chase. You stop comparing your life to someone else's. You build a financial life that matches your values, not the culture around you. So when people ask me what the top 1% do with their money, the real answer is that they act with discipline, consistency, and intention. They structure their money to seek growth quietly, predictably, and without unnecessary risk. They avoid emotional decisions. They plan long term. They treat wealth like something that deserves stewardship, not spontaneity. And because of that, their financial lives do not feel chaotic, they feel designed. These behaviors are not exclusive. You do not have to be wealthy to practice them. Instead, these habits are accessible to anyone willing to shift how they think about money. If you begin to treat money as a long-term ally instead of a short-term resource, everything changes. You become more patient, you become more strategic, you become more intentional. And that intentionality is the first step toward building the kind of retirement that most people only dream about. Now, the other piece to this mindset is having someone along with you on the journey. That's where we come in. Click the link in the description or scan the QR code on screen to get a free video review from us with personalized recommendations unique to your financial situation. We'd be honored to help get you on the right path towards your ideal future. Thanks for watching.